What's going? Okay, are we live? Okay, Steve, just stand by a second. Okay, so okay, we are live. Okay, thank you everybody for standing by. We had a little bit of some technical issues we had to solve today, so it's definitely going to be worth it. So again, thank you for standing by, and welcome everybody to Wall Street Reporter's next Super Stock live stream for December 24th, 2020. We are back with Steve McCauley, CEO of Empower Clinic, CBDT on the CSE, EPWCF over the counter. A lot of exciting things happening. So Steve, welcome back.
Hey, Jack, thank you. I really appreciate taking the time and getting on the show here. Probably the last one of the year, I would think.
Yes, and I think the audiences are waiting for some presents. Will you be Santa Claus for this year?
Well, I feel like I've been doing my best to be Santa Claus for our shareholders the last month of December.
Yeah.
And I think so far it's been a pretty good month, and looking forward to carrying that through to 2021.
Absolutely. I think one of the things that a lot of investors, are paying attention. There's two really things. One is what's happening with the labs business, but also the acquisitions, because that's a big part of the growth strategy. So with that said, now we haven't talked about. You announced the acquisition of the Momentum clinics.
Correct.
So can you tell our audience, what that's all about, like a snapshot of that business and what that's going to do for Empower?
Yeah, so we have completed the share purchase agreement, the definitive agreement. We announced that just a few days ago, and so we're excited to actually have that, come onto our books. In acquisitions, typically you do rolling closes, so we're literally having our close as we speak. Today is going to be an extremely busy day for me. And there's no let up at all going into the break over the holiday, simply because we have to get moving. So the acquisition is based in Toronto at this point in time, so that kind of call it the GTA, Greater Toronto Area. It's a clinic group with owned by two doctors, Dr. Jordan Rabinowitz and Dr. Aviv Zimmerman. And they are paramedical centers right now. So paramedical to us means things like pain management, physiotherapy, chiropractic, acupuncture, podiatry, other things, other sort of services. And we're really, we're very comfortable with those services because we provide those services in our clinic groups in the US, through Sun Valley Health. Now, going forward, we have a very aggressive rollout plan that commences immediately. We'll have some announcements coming maybe next week through the holiday, but for sure right after the new year, because we've already lined up a number of additional rollouts as part of the new group. And everything will be a wholly owned subsidiary of Empower Clinics, forming our new, Canadian clinic operations. So expect to see us aggressively bring to market clinics. We're going to be rolling out first through expanding through the Ontario market, but we've already lined up our opportunities moving out west in Canada. We get out to the prairies, into Alberta and to British Columbia. And if you look at the transaction itself, and we've highlighted it in our announcements, the two doctors who will form, part of my Canadian leadership team, they've got very big incentives for getting through to 30 new clinics plus as we go forward. And again, as I said, we'll have some, many more announcements about these new locations in the coming weeks.
Okay, and so this acquisition, what are they doing right now in terms of revenues? Like, how much is that going to add to Empower?
Yeah, so it's on the very short term, and I can't give full guidance, of course, kind of just based on securities rules, but we expect that clinics like this in the paramedical space really operate anywhere between $50,000 a month and 80, 90, even sometimes $100,000 a month in revenue. And in the model that we have for our rollout, something that's very interesting about the approach is we are partnering with other primary care facilities and partnerships where our speed to market on a rollout is actually much faster than, say, normal clinic rollouts. And the reason for that is this kind of, we call it a clinic within a clinic model, is we partner with primary care centers that have existing patients, have a facility. So when you go in to those facilities and you build out our clinic space for paramedical services, the time to build it out is faster. The costs are lower, and when you turn your phones on and open up, you already have a large base of patients to be referred to you. And the main source of patients in the paramedical industry comes from primary care physicians. So we really like the way that that partners. The primary care centers love it because they get some rent subsidies from us for our clinic program, but most important to them is that they get more visibility to the quality of care that their patients are getting from us.
Okay, so essentially, so these clinics that you're doing, these paramedical clinics, 50 to 100 grand a month revenues is sort of the
what we anticipate. Correct.
Okay, so if you roll out 30, that's an additional 1.5 million a month at the low end, roughly. If I do the low end of that thing, so that's 15 times 12. What is that? 18 million run rate approximately. If they open 30 clinics.
That's correct. That's exactly what we anticipate.
Okay, so you're in the existing run rate right now. The existing run rate for Empower is what, like approximately like where we are today?
Well, again, the interesting thing for us is the rapid amount of change and growth that we're getting in combination with the Chi Medical lab programs, the diversity of our programs with Sun Valley Health and how they're contributing to COVID specimen collections. And then, the Canadian Clinic Group acquisition, of course, can be very accretive. So, it's for me, I'm, quite comfortable knowing that as we're going into 2021, we would anticipate a path for us that, gets us, at least to 10 and moving forward. The unknown upside for us is literally the large scale contracts and opportunities that are landing on us for our national COVID programs in the United States. There's no let up. We're just simply getting so much demand right now. We're having to place large orders of testing kit inventory right now in order to not run out as we get through the holidays and into January. So I'm actually starting to overstock, but the order demand just seems to be continuing to be strong.
Okay, so basically, so roughly 10 million a year in the first quarter run rate, approximately, with the existing operations.
Well, with existing operations, to me now, of course, that means Sun Valley Health, our Chi Medical Laboratories, and then the clinic acquisitions. So we definitely with the acquisition closing here in December, the Canadian Clinic acquisitions, we're going to get a full year of that run rate commencing in January of this year.
Okay. So things are looking good in terms of to start off kind of the year with a bang.
Yeah.
So I want to kind of we'll kind of dive into what's happening with the Chi Labs, the COVID testing stuff. But in terms of I have a feeling that a lot of the investors are really there. I mean, they're looking at the M&A side as kind of that's going to be the big driver of growth. So what do you have in the pipeline as far as acquisitions are concerned?
Yeah, so fortunately, we continue to get a number of different opportunities that kind of land on our plate. We're very much out in the marketplace, chasing after opportunities. But so our clinic rollout strategy, we will continue to look at other acquisitions, both in Canada and in the U.S. We're going to, now that we have our Canadian clinic presence, mental health and our ability to serve the mental health healthcare requirements will start to get back to the forefront. I mean, our strength will always be managing clinics, managing physicians, and managing patient care. And we see a lot of new novel treatment options potentially coming to market in the healthcare space. But the thing to always keep in mind is that those new novel products will require physician care. They will require facilities and locations to manage that delivery of care. And that's really where our strength will be in mental health going forward. So we can expect, or the audience can expect to hear more from us in 2021 on our position back into as a mental health care provider also. The other acquisitions that we're working on right now really are around technology and what I kind of call healthcare technology. We are already strong in technology and our technology layer through our telemedicine that we use every single day in our clinics. We're very strong with how we communicate with our patients, but there's a greater need for deep discovery of our patient data using artificial intelligence, so that we have hundreds of thousands of patients and millions of data points. How we mine those data points and accurately help our practitioners learn more about the types of qualifying conditions that people might have and what's the most appropriate care for those patients. Working through those technology layers for me is going to become an imperative as we move into 2021. And I believe that we'll see more acquisitions related to technology as we move into the first quarter and beyond.
Okay, that's very sounds very open-ended, very open-ended. So technology. So there's things in the works. Now you have a bunch of cash right now. So you get the warrant exercise that came in.
Yeah.
How much cash are you sitting on right now?
Yeah. So we I guess it was last week we had an announcement. We had pulled in excess of 5.5 million. It didn't really slow down at all. So, we on the warrant exercise alone have now exceeded $7 million, and it's continuing. I can tell you this morning, we have, additional inbound requests for conversions. So, I don't know where it will stop. We're extremely pleased with, having that, substantially increased cash position without going to market for a financing, and it gives us tremendous flexibility. It makes closing the Canadian clinic acquisition effortless. It gives us the ability to go after larger, more accretive transactions. Our market cap is substantially higher now than where it was at the beginning of December, and again that changes how I look at transactions, how we structure transactions, and also the scale of transactions that we can potentially go after now. It changed over the last 3 weeks, and it's a great position to be in. I'm grateful to our shareholders and investors and followers for their support, and we will use it wisely. There's no doubt about that. But we will continue to be aggressive as we go to market and find growth. And we just know that growing through acquisition is really one of our best methods for rapid growth into 2021 and beyond.
Okay. No, so roughly it's going to be roughly 8 million, probably, assuming the stock stays where it is, maybe moves up a little bit, so a little more warrants get exercised. So 8 million. What you have obviously internal growth, everything like that, but yeah. Let's say you deploy 5 million capital for acquisitions. What can you buy with 5 million? I mean, it's not going to be just. I mean, there's probably going to be just a couple. That's going to get you. There's going to be an earnout, everything else. So, I mean, are we talking about something that's 25 million in revenues? Like, what? How much revenue can you buy?
Yeah, it's interesting. So, obviously the category of acquisition target impacts the valuations that you may have to pay, and deal structures. Every deal is different, right? But we typically as we look at clinics, we tend to target somewhere in the 1 times revenue for a clinic acquisition. We have the luxury of our stock, and we have cash, and we have earnouts. So, with $5 million cash, if I was to deploy that, I mean, you're right. You get into huge numbers, 20s, 30s, $40 million in top line revenue. Could potentially be achievable with that kind of sort of acquisition capital, let's call it, or clout. And again, depending on where we target, whether it's a combination of clinic groups with technology play or standalone technology plays, where we target clinic operators or healthcare operators in the mental health space, perhaps because of capacity requirements, we need to pick up additional labs in the United States, because the demand for our testing services and our testing products, it simply is not slowing down, and there's nothing that indicates that the requirements related to testing will slow down in 2021 and further.
Okay, so I guess the real challenge is going to be how you choose to deploy that capital, because I mean, with $5 million, I mean, you could really make a transformative acquisition. Something, again, you can get something that's going to add 25 million to the bottom line.
Yeah, and we can do
revenue.
Yeah, we can do a number of transactions. I mean, that's when I say that the decisions that I have in front of me have changed in the last 3 to 4 weeks. I mean, these are meaningful, different conversations because we have substantially more scale. We have substantially greater amounts of cash. We have access to future capital as required if it was for the right reason. So it would be reasonable to assume that the type of acquisitive growth is going to just simply be larger, have more scale, give us more reach into more markets, and continue on our strategy of being an integrated healthcare provider. You're going to see us continue to be strong in paramedical services, but we're going to be strong also in primary care and mental health. There's no doubt that we're going to play a role in that going forward. Okay,
so there's been a couple of hints here about what the potential is. I mean, there's a couple of hints. So anybody that's paying attention. Okay, so let's. We got a super chat. Eric Sue, $5 donation here. A Christmas gift. Steve, I'm gonna send you half afterwards.
Thank you, Jack. I appreciate that.
In US dollars. I'll send you a PayPal. Eric is actually a big fan of the program, big fan of CBDT. I think he's made some money in the stock, probably. Otherwise he wouldn't be
providing gifts.
Obviously. So which is good. So Steve, let's go into some questions. People are asking about the Chi Labs. There's obviously that's a big part of the growth. So what's happening there? And then I'll jump into some of the audience questions.
Yeah. So boy, Chi Labs. Wow, are they working hard? They are absolutely slammed. We're hiring additional scientists right now, simply to deal with the volume that we have on our plate right now and the volume that's coming. Our product development cycle is on track as planned. We had our new saliva tests are being produced right now. We've got our internal distribution started. Our external distribution to other clients is coming, imminently. We've got back orders of the saliva tests already. We just took in another large order, in the state of Texas for a large corporation that they feel it's important for them to test their employees regularly and often. They placed a 3,700 unit order for our saliva tests. This is valuable revenue, high margin. I just placed another back order of 5,000 units just to have inventory over the holidays because of the demand that's coming. We also are launching building and launching a new e-commerce website for Kai. It's called kaitests.com, and it will be a source where consumers, businesses can go and land on that and directly purchase these new products that we're bringing to market. And keep in mind that, typically the PCR tests that we all kind of know about, whether it's a drive up or you go to a clinic, those require, a med tech, a specialized phlebotomist to administer the specimen collection. The real benefit of the new saliva tests is that they can be done at home, self-administered. They can be done at your place of work. They can be done, at an airport. It can be done at a cruise ship terminal. The specimen is collected easily. It's not as intrusive as these swabs are, and it goes to our lab, gets processed as a PCR test. So it's still the gold standard test, and that's going to continue to be just such an important part of getting our society back to work, back to business, getting back to travel.
Okay, so let's go into some audience questions.
Mm-hmm.
So Carlton is asking, can the rapid COVID test kits, can they detect the new strains that we're hearing about?
Yeah, talk about a scary proposition with what we've seen from the UK right now. So I don't know the answer to that question. It's something that we've got to go back to our scientists, our molecular scientists. I simply don't know at this point in time, and I don't think anybody really knows at the moment. It's concerning for society. It's obviously created just immediate lockdowns in the United Kingdom, and for us, with our strong position in new product development, in testing, and having the scale of Kai Medical Laboratory, we're in a good position, and I've been telling the audience, I've been telling shareholders and investors, the prospect of vaccine coming to market and testing, they're not directly correlated. One doesn't go up and the other, volume comes down. Our society needs, ultimately herd immunity, but you're talking 60, 70, 80% of the population needs to be vaccinated. And, in Canada, we can barely get 20% of the population to take a flu shot. So this is going to be with us for some time. And I've been working very hard to position ourselves to be in a place of strength, to be able to handle the volume that's coming our way. It's very solid revenue with a top line revenue, but it also has really good margin. And so we're already feeling the impact in our fourth quarter of those new cash flows that have come from the Kai Medical acquisition. Because we only just closed it in October. So we're getting slightly less than a full quarter of that revenue, but the cash flow that's coming from it month over month over month, it's just continuing to increase.
Okay. Yeah, so it seems like, with the new strains, this is going to be like an ongoing, unfortunately, ongoing problem, and that you're going to be working on solving for. It's going to be dragging on for a while. It's not.
Yes,
there's going to be something else. Michael is asking, how is the partnership with Loop going in terms of simplifying and venue bubbles? What's happening with Loop partnership?
Yeah, so we are doing a number of very important sort of tasks with Loop particularly. So one of the IT projects that we have on right now is actually doing a back-end integration with Loop Insights and their system, which connects to their Wallet Pass technology. So think about when in our lab, we have our equipment and machinery, and we have an IT system that's called an LIS, which is Lab Information System. That's the system that delivers the secure link to a patient or a consumer who just did a test with us that provides their test results. And what we're doing is we're linking the back-end servers or the IT systems of our lab information system to Loop Insights directly, so that it speeds up the communication flow. But what it also does is, as a consumer is checking in somewhere, whatever that check-in might be, airport, event, cruise line, and the Loop Insights technology is being utilized for contact tracing and check-in, their negative COVID test or positive COVID test will be directly linked to that wallet pass. It then allows, it's basically like a, green for go through and red for, unfortunately you've just tested positive, and will not be able to, your check-in wallet will not be activated. We think that's a crucial component to successfully dealing with travel bubbles, event bubbles, and really getting the combination of the power of Loop Insights and of our technology on testing working in partnership in the most effective way. So that's one aspect of what we're doing. The other thing is Rob Anson, the CEO of Loop Insights, and myself, we're in contact every single day. We are all working on different relationships, and we're working on transactions together in combination with Loop, Simply Flying for the airline aspect specifically, and tourism, and with some of the partnerships that Loop has been able to bring to the table also.
Okay. Let's see. John is asking, any indication where you are with Health Canada in the saliva test for in-home use?
Yeah, so I can talk about that very specifically. So we have not submitted our saliva tests to Health Canada yet. We have assisted our pharmaceutical partner, API Pharma, with their, their Health Canada submission of their rapid antigen test. I'm personally the registered Canadian correspondent with Health Canada for that submission. Health Canada has provided us an official application number, which is part of the initial process. And Health Canada is working with the pharmaceutical company. I was emailing myself with Health Canada yesterday on the topic. So that's one that's in process. Now that we have our Canadian clinic acquisition completed, we are going to be applying for what's called an MDEL license. So that's a medical distribution and importer license for Canada. For us to be able to sell COVID-19 kits or provide COVID-19 testing, first we have to have clinics, we have to have physicians, but we also have to have the Health Canada MDEL license. That application process is going to start next week. And hopefully Health Canada can be turn it around fairly quickly, so that as we get into 2021 in Canada, we may have the opportunity to expand on our testing capabilities for the Canadian market.
Okay. What about? I mean, people are saying like they're developing new tests, new COVID tests, which don't require a lab, sort of like a do-it-yourself test you buy at, I don't know, a pharmacy. There supposedly it's going to be. How would that affect the Kai Labs business?
Well, with all things in testing, the thing to keep in mind that the ultimate gold standard, which has the highest degree of accuracy, the lowest rate of false positives, false negatives, is PCR testing that is conducted by a lab. That requirement, is not going to go away. If you take rapid tests, it can be an indicator of you have the antibodies, so you've previously had the COVID virus. The rapid antigen tests are important because they do have the ability to indicate even if you're asymptomatic. But if you get a positive rapid antigen result, it's strongly recommended to back that up with a full PCR test as well. So when we're talking to our travel bubbles, to airlines, to cruise lines, we're talking about the utilization of all forms of testing, rapid antibody, rapid antigen, and PCR as part of the supply chain. And depending on where you are as the traveler, the consumer, a worker, a mining company as an example, where social distancing is impossible. All forms of those tests will play a role at different times in different phases. And as we work with, as an example, the airline consultants at Simply Flying, one of their specialties is designing those processes to make sure that the whole program for testing and contact tracing all work correctly for the various industries. And there are a multitude of solutions that are going to be required for this.
Okay. Oh, Steve, you got to come back every day. We got George R. making a $20.99 donation, saying thank you, Steve and Jack. Both of you are changing lives. So Steve, well, you're the one. If it wasn't for you, I wouldn't have $20 coming in today. So
it's going to be a good Christmas for you, Jack.
It's gonna be great. So come back in a couple of hours. Come back again for an update. Let's see what do we have here. Other questions coming in. Are your test kits in Montreal? A lot of questions. We got, like, is Montreal a separate world? Because like everybody asks, do you have this in Montreal? Like, is that like a?
Well, I can tell you that we have a lot of followers from Montreal and from Quebec. Our Francophone audience and investor group are very important. I can tell you that sort of general group of investors pay a lot of attention to what we're doing, and they care about their own investment, of course, but they care about where we're going, and they follow very closely. And to answer the question is, right now, unfortunately, we do not have any of our test kits in Canada. And but we hope that that's now, with our Canadian Clinic Group acquisition, going to allow us, as we get into the first quarter of next year, to be in a position to start bringing our tests into Canada.
Okay. You have a new website address for Chi Labs?
We do. So there's a couple things happening with the branding of Chi Labs. We are doing a brand refresh right now to really just improve the visibility of the brand, its message, its appearance. And in conjunction with that, we're also producing the new e-commerce site which is www.kaitests.com. So KAITESTS.com. That's meant to be a direct-to-consumer, direct-to-business source to be able to purchase our various products. Initially, they'll be our at-home available COVID testing products, but we envision all forms of at-home tests, whether they're men's health, women's health. You think of hormone testing, toxicology. There are a number of tests in the market now that can absolutely be administered, at home in private, sent back to the lab for processing, and then the results directly communicated to the person.
Okay. Let's see. I think I just missed a couple of questions. Okay, stand by. We got hundreds of questions here. A couple of questions. We have multiple questions about dosed wellness. What's happening? And that's this kind of the psychedelic.
Yeah. So we earlier in the year announced our intention to start to play a role in mental health. And the key for us to be able to even participate in the delivery of mental health care and wellness is we have to have our clinics and our practitioners and our therapists working towards those objectives. The key for me has been to identify our first Canadian Clinic Group acquisition and then rapidly build out on that. That is the layer that now gives us the ability to also extend into mental health care and wellness and the provision of care. So we have a division that we formed called Dosed Wellness. We would anticipate now that we're going to be able to start to move our efforts into that in a dedicated brand dedicated to mental health. So we certainly will start talking much more about that in the new year. And we will use our acquisition strength and capability to also look at how we can speed up the clinic model for us in mental health going forward.
Okay, so we get a logistics question here. Steve, can you read it, the whole question?
And yeah. So the question being, I think the audience can see it. So the turnaround time for the saliva tests are really the same as the standard PCR tests. So if you were to order the test, it's going to be shipped out to you, via overnight courier. Hopefully at some point it's going to be available on the shelves of pharmacies and retailers. You would complete that specimen collection yourself, and in the return self-addressed envelope to our lab, it would come back to us, and the processing time, from the point in time that we receive it, is going to be anywhere between sort of 12 and 24 hours. And excuse me. So that is, no different than what happens today on our PCR tests. Our job will be to make sure that we have our operational capabilities lined up as we continue to scale. What's happening right now, because of our substantially improved capital position, we're hiring staff. We're hiring lab techs. We're hiring molecular scientists. We're hiring operational people through Kai Laboratory and also through Sun Valley Health, simply to help with the process of managing inbound specimens and outbound specimen, test kits. And we also have a packaging distribution partner to assist us in fulfillment. So all of those things are taking place right now in anticipation for the increased demand that we're seeing for the new saliva tests and the new, keep in mind we have our ABC PCR version of the test, which is test for influenza A, influenza B, and COVID from the same specimen. So we're expecting that version of the test to also be important going forward.
Okay, so just a comment, lab tests, kind of that's the gold standard for accuracy.
Correct.
So I think any kind of serious corporate use, they're going to want, like, you're doing stuff with Disney, right? So,
well, we're doing stuff with film and television.
Yeah. Okay.
So, we have, we've been fortunate to have some, very exciting and large film and television contracts come our way. We've got dedicated business development folks that are specializing in film and television. It just happens that particular industry, because of the guidelines from the Screen Actors Guild, it requires them to do significant volumes of testing each week. So in the US, as an example, all productions, all people involved in a production are required to be tested 3 times per week. So we're also seeing the film and television industry really wanting to move to the saliva test. Because if you're participating in a production and you're having to get a nasal swab multiple times per week, there's potentially a lot of discomfort there. So film and television industry are excited about our new saliva test as well.
Okay. We got another super chat. So Steve, you got to come back in about an hour after we're done for dinner time. Michael again, one of the big fans of the channel. I guess he's also got in early into CBDT. He's probably one of the guys who got in at a nickel. So let's see. We got Michael. So thank you. Okay, so we got other questions. I guess a lot of people just the one in terms of the logistics. Like turnaround time. For the tests. What's going to be the process for really scaling this? And again, one of the big questions we have is what happens after COVID goes away? It will go away at some point. What's going to happen to the labs?
So the long term, I was never worried about the long term on the labs. There's something, kind of a bit of a phenomenon in the specimen space or lab space. So as a result of the pandemic, society stopped going to emergency rooms. We stopped going to our doctors. And as a result, normal lab specimen requests actually declined. Things like blood, hormone, toxicology actually declined substantially. The COVID side of testing, of course, has grown exponentially. So what we expect long-term from a revenue structure, we expect near-term, mid-term to absolutely continue to be strong with the requirements of testing. I'm thinking years, I'm not thinking weeks or months. There's no indicators right now that the requirement for testing is going to slow down or diminish going forward. The other thing that we have with our labs, so if you take Kai Medical Laboratory, we've got 1.5 million US in state-of-the-art equipment that also can cover all the traditional lab specimen collection and testing requirements. So we expect that volume to start to come back for the medium to long term. So even if there's starts to be a shift or a slight,
that makes a lot of sense. It's basically all the tests that are basically not being done. They're going to come back, and that's
coming back. They're coming back for sure. So when I looked at the this initial acquisition, and we looked at, well, what would the future look like? And we can't just make a decision for a short-term play. We've got to be prudent with our decision making. So the analysis is showing that the normal lab volumes that we've historically seen, although they diminish now, they're going to come back in the future. So I'm not concerned about the viability of our lab companies in the future at all. We're just grateful for being able to take advantage of the dramatic market that we're seeing right now from this type of testing. And then also keep in mind, the reason that we're creating KaiTest.com is not just for the short term of COVID tests and making them available, as an e-commerce platform. It's for all the other types of traditional testing that can be delivered at home as well in the future. So we'll see expansion of the test products that are available on KaiTest.com coming in the future as well.
Okay, we actually have two interesting questions right now. First one is Landon asking, how many tests is Kai doing right now? And Stock Boss number 12 asking, can you administer the vaccine as well, just like the flu shot?
Just like a flu shot, yeah. So on the second point, the short answer would be yes. So I can tell you that I've tasked our medical team at Sun Valley Clinics in the state of Arizona to investigate and apply to potentially become a vaccine distribution point in the clinics in Arizona. We will absolutely look to do the same thing in Canada with our clinics now that they're online and we're rolling out, and especially as we extend our reach into primary care. So as we extend our reach into primary care with the partnerships that I talked about earlier, we potentially will absolutely be involved in the administration of vaccine shots, similar to a flu shot. On the first question, I'm not in a position to give guidance, right now on our volumes through Kai. What I can tell you is that since we acquired the company and we closed in early October, month over month, volumes have skyrocketed. These are not sort of, hey, we're ticking along at a slow pace month over month. It's literally, we've been driving traffic into Kai. We've been driving new contracts. We, secured that other film and television contract for 10,000 specimens over 4 months. That work is being done right now. We secured a 3,700 unit contract for our saliva tests. So we're getting orders coming in all the time of various sizes. They can be 20 unit orders, they can be 1,000 unit orders, they're 10,000 unit orders. We have consumers driving up to Kai Medical Labs every single day for testing. We have patients coming into Sun Valley Health every single day for testing. So we're fortunate to be getting volume from a number of different sources, but that was the goal of taking on an acquisition like Kai Medical, is that's ultimately where the big revenues and the big margin comes. It's when you own the lab, as opposed to just simply partnering with the lab.
Okay. I guess question is, what is your competitive advantage? I guess in regards to, I guess you're in a couple of different business lines. So whether it's labs, whether it's clinics, anything.
Yeah, it's healthcare. I mean, we're absolutely positioned ourselves to be a pure play healthcare, integrated healthcare is part of our mission and our vision. Our competitive advantage is absolutely where our market cap is going right now. Our cash position puts us in a very strong place relative to our peers. I think that, we're from a capital market standpoint, I still consider us highly undervalued to our peers both in Canada and in the US. And that bodes well for us going into 2021. I think it's going to give us an opportunity to really be super acquisitive because we've got much more scale, we've got the cash, we have access to capital that we wouldn't have had before at much better valuations. So if at some point, we need to go back to market or want to go back to market for larger financings, it's going to be at just a much better scale, a much better valuation than we've ever done before.
So, so speaking of the value, so fully diluted right now, how many shares are out? With the warrants exercise and all that.
Yeah, so I mean, it's kind of a moving number every day, but I for round numbers, it's about 275 million with the recent large amount of warrant conversions, and so you
90
sort of
million or about. So we're talking about 90 million market cap. So it's about was it? So it's and you're looking at run rate of 10 million roughly in the first quarter.
Well, run rate, so annualized run rate.
Yeah. So basically, you still so it's 9x revenue forward. So it's still pretty much at a discount to what the peers are in the healthcare space right now.
Oh, very much so. I mean, if we look at the peers, when we have our investment banking discussions and we have our capital markets reviews. I mean, we look at the peers in the U.S. and in Canada. In the public sector, and we're seeing valuations run anywhere between 35 and 40x over TTM, so trailing 12 months revenue, somewhere around 14 to 18 on forecast revenue. So we're definitely still discounted to that. It's why I'm fairly I'm actually bullish on where our valuations should be going. Our responsibility is to use our capital wisely, but continue to be aggressive with our growth and our acquisitions, and particularly our clinic rollouts, which are clearly our strategy for revenue, margin growth, and earnings per share going forward.
I think, Steve, right now the market really at this point expects you to make a transformative acquisition based on the capital you have now. Yeah. So I mean, essentially, you I think the expectation is, a run rate of 35 million plus by in the first quarter to get to that number. That's what the market needs right now. So
yeah, I mean that sounds.
And when you get there, then the stock could run further. But this is what we need right now, basically.
Yeah. So I mean, again, it's difficult for me, as you know, by rule to provide guidance and talk about. Kind of what's in the pipeline right now. I can just tell everybody that our pipeline is strong. And again, given our new valuation and cash balances, it allows me to be much more creative in deal structure, go after bigger transactions, go after more transactions, and continue to build out this integrated healthcare model that we're designing.
Okay. Steve, we're gonna have to keep you here all day, basically. Rafiq, $10 super chat.
Merry Christmas.
Keep this going, but don't leave, Steve. We'll have you here 24 hours, like CNN. What is that 24-hour channel news or something? Let's see what questions here. What else do we have going on? I think the main takeaway is going to be the market's going to be really looking at how quickly you can get to that run rate of that 35 million plus, but because at that point the stock will be undervalued based on the forward looking. So I think that's going to be the challenge, Steve, is you're going to have to close some deals as quickly as possible.
We understand, Jack.
Meaning like by next Friday, basically, is who need this is what the audience expects. Okay, so and you've mentioned this. Okay, we're talking about the same thing. The psilocybin. This is we're talking about the psychedelic. Okay.
Yeah. So I've touched on it just a couple of times here in this. And
a lot of interest in the space. But people keep
there's a lot of interest in the space, and the novel new treatment options for mental health care, psilocybin being one, are all potentially extremely important to society going forward. Our role in that space is going to be with clinics, managing the patient care experience, managing physicians in that delivery of healthcare for mental health. I wouldn't anticipate that we are going to be a pure play psilocybin pharmaceutical company trying to manufacture psilocybin based product. We absolutely have the potential of playing a huge role in the sector. Keep in mind the importance of the data that we have. So we have 165,000 patients in our existing database in the United States. Many of those patients, part of their qualifying conditions would fall under mental health. And to the extent that we can mine our data and provide data and insights to the mental health care sector, I think that's where our value really comes into play, along with the delivery of care in the mental health sector. So, we're going to play an important role in that going forward. And now that we have the Canadian clinic layer, in place, it's going to enable me to start to push the agenda for mental health going forward.
Okay, a lot of questions about moving up to maybe TSXV. Nobody's asking about OTC QB. No, I think everybody here is Canadian, but Steve, we need to get you onto the OTC QB now. Yeah,
so we're already registered with the QB, and to answer the question directly about a bigger exchange, it's absolutely in our kind of roadmap to uplist. We need to obviously get to the type of scale that would be necessary, but I can tell you, I firmly believe that this company will be uplisted at some point in time, whether that's on the Canadian side or it's a NASDAQ listing. And given the fact that we have a strong presence in the US with US-based assets, it certainly would be logical to work toward the path of getting an uplist in NASDAQ. But more to come in the new year on that one. But that's absolutely on my long-term pipeline is to get an uplist.
Okay, the stock is on the QB. I didn't know the stock is on the QB right now, the OTC.
It is. It's not. Yeah.
I'm so focused on the Canadian things right now.
Yeah, and we're just wrapping up our DTC listing right now. Also, okay. So that is actually being processed as we speak. So I think that it won't be finalized over the holidays, but I would expect early in January to get our confirmations of that DTC listing as well.
Okay, so that would help with the U.S. side.
Yeah, it's a very important aspect for U.S. holders for sure.
Okay, so Steve, let's kind of wrap up here. I know we're going to have you back probably by mid January. So big plans. What's the big takeaway here is 2021. What is the big plan? What will the company look like when we do this live stream next year? This time, December 24th, 2021.
Oh well, a year from now. Goodness.
Let's look at 6 months. Let's stick with
even looking at a year from now. My expectations are that we've got many dozens, 20s, 30s, 40s of clinics in our portfolio. We have added very relevant and important technology platforms to our business model that allow us to provide greater quality of care to our patients, make the delivery of care for our physicians greater because of the use of technology. I expect that we will be heavily involved in data mining as it relates to our patients and the delivery of healthcare. I would expect that our lab businesses will have had tremendous growth and have a tremendous, long-term run rate with serving multitudes of industries and consumers and having a very solid direct-to-consumer platform that's driving a lot of diverse volume and revenue. I would expect that we would be highly capitalized. Our valuations are no doubt going to continue to rise, just based on all of the fundamentals of growth, of top line, of free cash flow, and potentially by this time next year, we've already announced our intent for uplisting, and we'll see what that looks, what the next couple of quarters look like, and our team will be, my bench strength, my leadership team, our board. We'll have more people. We'll have a lot of quality people supporting us and working with us, and simply just be a much larger player with much more scale.
Okay, this is interesting. You mentioned the tech platform a couple of times. That's something that could be a big theme in coming months. Okay, so this looks like a pivotal year, 2021. Very interesting, Steve. Thank you again for joining us. Thank you everybody in the live stream today, the great audience, and all the super chats. Merry Christmas, Happy New Year, and we'll see you in January.
Great. Thank you, Jack. I appreciate the time, and happy holidays to all of our followers and your audience.